Hi guys. I just wanted to invite Nelson to contribute to this module. I mean, first of all, real estate is quite an exciting industry. It's very diverse, but it's also quite traditional. And there's quite a lot of things happening in terms of innovation. There's a fast-paced acceleration in digitalization, and new tools are being created day in, day out. So in terms of utilizing AI and machine learning. Since we have touched on the subject of machine learning applied to marketing, I thought it would be good to have a different angle that I think is relevant to all of us. We all touch real estate at some point, whether it's to put a roof above a family, for investment purposes, as part of our work to counterbalance to balance our portfolio of investments. So I thought it could be very interesting to see to have Nelson's point of view and feedback on PropertyQuants, the company setup, and especially since it's part of our family at INSEAD. So without further ado, let Nelson take over and introducing us is how to disrupt the real estate industry.
Yeah, thanks so much, Florian, and glad to be with you guys today. Maybe just a little bit of introduction about myself. So yeah, I actually did my PhD in decision sciences at INSEAD some time back. Together with my advisor was Professor Neil Bearden at the time. Educationally, was also I did a CFA, and then my undergraduate was in economics and master at Columbia. So by way of background, when I first graduated, so I did a lot of, sort of analysis of statistics and economics and so on. When I first graduated, my first job was actually at a quantitative hedge fund out in New York. So building these data-driven models to trade automatically futures as well as stocks. Then after the PhD at INSEAD, where, if you think about decision science, it's all about making mathematical models of business problems, and then how do you solve them, but also some element of the psychology of how are people actually solving them, or what are people actually doing. Then continued on to Sovereign Wealth Fund, GIC here in Singapore. Also looking at a little bit of, can we figure out some tactical asset allocation by looking at the numbers? And then moved to high frequency trading at KCG, which was previously Getco and elsewhere. So again, using data-driven models to invest. At the same time, was investing in real estate in a couple of different places, Tokyo and London and Singapore, and was sort of saying, hey, the process or the approach of real estate investing seems to be quite different from what people are doing in quantitative finance. People are not necessarily being as data-driven about that. Is there an opportunity to apply some of these methods in the real estate field? So about 3 years ago, me together with a colleague who I worked in the quant trading field, we started PropertyQuants with the goal of really bringing these quantitative methods into real estate. I can talk a little bit at the end about what else PropertyQuants does. But what I'd like to do today is walk you through sort of how we came to this journey, what the opportunity set is, why quantitative approaches in real estate, what are some of the things that are going on, how do we really apply some of these methods, and what are some of the tangible benefits and companies to watch, right? So I think that's what we want to walk through today. If you have questions along the way, is there a chat or something you can feel free to type them in, or we can answer them along the way or at the end. So feel free to ask any questions that you have. And also as a note, I am also sort of an adjunct faculty instructor. We conduct a course in data science at SMU, and upcoming, which I'll talk about at the end, there is a new program launching at NUS's newly launched Asian Institute of Digital Finance. So if you're interested, myself and my co-founder will be conducting some part of that program as well. With that, maybe let me begin and talk about sort of why real estate, what the opportunities are for quantitative approaches, and how exactly you can use them, and what to watch out for, and monetization opportunities and so on. So as mentioned, when I started sort of in funds, somebody else. Yeah, okay, thanks. But if you do have a question, ask, or else if there's a way to type it in the chat, you can type it in, and then maybe somebody can let me know what the question is. Yeah, so when I started out in quantitative trading, sort of earlier 2000s, that was still relatively considered more novel. Yes, you had sort of, Renaissance and Bridgewater and other firms doing it, but still, if you think about early 2000s, it's still not a very large percentage of hedge funds overall. And then if we fast forward to where we are more or less today, we can see on this chart here, today, this is really successful, right? 1/3 of every dollar invested in a hedge fund is actually in a quantitatively oriented hedge fund. Depending on who you ask or who measures the statistics, anywhere between 60 to 80% of all trades on developed stock markets are done by computer algorithms. So sort of using these data-driven machine learning approaches to invest has really taken off in a big way in the public markets hedge fund industry. Then if we look around and we say, okay, well, why real estate, right? If we look at real estate, just the top 100 real estate managers, their assets under management actually is in excess of the estimated AUM of hedge funds overall. But if we think about whether any managers in real estate space are really doing quantitative investing or any data-driven investing, that's basically close to zero, right? So that seems like a really huge opportunity space, and the data sets and the tool sets are catching up. So maybe we are where we are in finance, 25, 30 years ago, and maybe this trend is beginning now. So that's what got us interested, and I think that's the opportunity in the space as well, if you guys are interested in it. And just as a note, sort of confirming the state of play, a really good set of surveys comes up from KPMG. So if you look at the KPMG Global Proptech Survey, so you can Google that and look it up, KPMG Global Proptech Survey, they released one in 2018 and released one in 2019. I haven't yet seen the 2021, but maybe something to do with COVID and they pushed it out. In any case, some of the key findings, right? We have almost half of participants in the real estate industry. They said, what are all the technologies available and which do you think will have the biggest impact on the real estate industry? And almost half of them thought that of all the technologies available, it's going to be AI, big data, data science that will have the biggest impact on the real estate industry. However, we still have the state of play being that 80% of all these real estate companies do not have most of all of the decision making being data driven, right? Another statistic is showing that only about 20-25% of them actually have processes in place or well-defined data strategy, right? And then there is also a skills gap in this field. A lot of real estate companies we've seen over the recent period have appointed somebody as being in charge of a digital transformation or data science or data analytics effort in the company, or more broadly they might put somebody in charge of innovation, right? Now, people leading these roles, the state of play is that only 5% of them have a background in data analytics or anything close to, sort of data science or machine learning. So there is a skills gap, right, relative to what is the perceived opportunity. Just to highlight the opportunity in sort of the investment space, the size of real estate investment funds is just astronomical, right? The top players are very, very large, right? And there are some in Asia as well. So just to highlight, CapitaLand is actually number 10 based out of Singapore, right? GLP also, right? Global Logistics Properties also there, number 19, and so on, right? And so all these companies are really, really large, and there's an opportunity here. And why real estate, right? So, we were saying, let's try and figure out using these quantitative methods on this field, and why this field and not anything else. It's actually one of the largest asset classes. So an interesting report that you guys may have come across or may want to read is done by Savills, and I think it's called How Much is the World Worth? So if you Google that, like Savills, How Much is the World Worth? You will find a report like that. And what they've done is try to total up the outstanding stock of value of various asset classes. So if you look at the chart, residential real estate alone, right, it exceeds the value of listed equities and listed debt, right? Either matches or exceeds by some amount. Commercial real estate is also pretty large. If you sum up real estate as a whole, it's the world's largest asset class, right? And in fact, residential real estate is many times larger than commercial real estate, even though a lot of funds are focused on the commercial space. By way of comparison, like global GDP is about 80 trillion US, right? So a couple of years worth of global GDP. There's a lot of buzz about Bitcoin and the cryptocurrency space and so on. And yes, this estimate is showing that it's a really, really tiny percentage of the overall stock of wealth. Now, cryptocurrencies have bounced since this report, but even with recent pricing or going back up, it's still something like $2 trillion. So, real estate is just a really large opportunity set. And so, what is the potential in terms of what difference can we make by using quantitative approaches? Here is a chart showing, on the left, the typical sort of top investment destinations, right? These are the usual suspects. People always have this concept of sort of gateway cities. If they're going to invest, they tend to invest in the gateway cities, and places that you would expect. Put their money in New York, LA, Paris, London, things like that. It's probably a longer list than this. This is the top 10 city by volume of investment for first half 2020. There's probably about 20 cities on that list. Anyway, you can probably guess what they are. And what we are showing on the right is the 1 year change for investing in specific cities. What you will notice is very typically the gateway cities perform very much middle of the pack. So if you look at, say, returns in Tokyo or Hong Kong, very much middle of the pack of the fuller list of cities that around the world. Seoul had a good year in this particular instance, but if you typically look at it, it's also middle of the pack. But if you could figure out in any given year using a data-driven means where to allocate more accurately, and if you could pick, say, the top performer, right, versus, say, avoiding picking the bottom performer, that spread in a single year can be almost, more than 35% in returns. So if you can use a data-driven way to figure out which are going to be the best performers, that can be a very significant difference to your investment performance. And as the world sort of becomes more and more global, with people sort of having more and more cross-border investment flows, it's not really possible to monitor each and every one of these locations using human means. So we need a data-driven approach to monitor all of these different markets and try to pick the opportunities. And this is performance at a city level. Now, if you think about it, if you think about your respective markets, say even if you're based in Singapore, Singapore is a small country, but the performance in various areas also varies dramatically. Right now, maybe some of the suburb areas are performing a little bit better, and versus, say, if you're in District 9, Orchard, prices are actually flat to down, versus, a little bit outside central regions actually picking up. If we think about yields, right? Yields, like, say, if you go to Sentosa Cove, gross yield is probably sub 2%. If you go up to like a Woodlands area, if you look at houses, then yields are probably in excess of 4%. So if you think about that, even within these cities, right, there is going to be a variation in the potential performance you can capture. And then that's just way too much for a single human being to figure out. And so machine-driven approaches to figure this out can really make a difference. I just wanted to also touch on the fact that, there is a recognition of this opportunity to apply data science methods into real estate investing. Here are some of the recent activity that we spotted. So if you look in the upper left-hand corner, Skyline AI, if you guys, if that's a new name to you guys, go check it out. It's kind of an interesting startup. Some Israeli guys, are really good, data scientists, started this company. It's backed by JLL, DWS, TLV. And in 2020, March, they were announcing their second acquisition of a commercial building, I believe, using data-driven methods where they ingest tons of data and figure out what the best investments are. Investor out in Australia, that's in the upper right. I believe they are partnering with Oxford Properties and using Spark Beyond, which is a platform for sort of AI analysis, are using this sort of methodology to pick investments in Australia. In the bottom left, we have Quarry, which partners with Cherry. So Cherry is a big real estate data provider out in the US. And, they've just closed another round, I think 50 million funding, and are doing really well in that space. And their partnership, I believe, with Quarry has recently done some automatically picked acquisitions in Long Island and New York. So there's some, life or some recent takeoff in quantitative approaches for real estate investing. And then in the bottom right, Two Sigma, right? So if you guys are familiar with Two Sigma, sort of a big quantitative hedge fund, just exactly a month ago, publicly announced that, hey, they're going to step into using quantitative methods into real estate investing. So really exciting time to be in this space, or for you guys if you're interested in where there's an opportunity to apply data science methods next, I would actually say that real estate is a really good place to look at. Right? So what I wanted to touch on, in a, not fully in depth, but I wanted to give you a flavor about, one of the things that we come across when we chat with various people. In fact, so the company, we participated in an accelerator together with colleagues and Techstars in 2019, and we chatted with hundreds of people in the real estate industry, and we said, hey, we're going to apply data science and machine learning to real estate. And we get back this kind of blank look like, oh, what is that, right? What is it all about? What can you actually do, right? What are some of the concrete things that you can do with it? So I wanted to touch on quickly some of the methodologies and what are some of the concrete applications. I think this might be useful to you as you think about, even in other industries, how can we use some of these methods? What's the monetization and what's the opportunity? So this is an overview of some of the methods that are being used in sort of real estate industry. Now, first thing is property price indexes. So real estate has a unique challenge, which is that for the assets, even if you had a complete data set of all of the transactions and information about them, it's not that easy to understand where the market overall has been. And the reason is that every asset is different, right? Sometimes you have, say, a small studio apartment in a luxury building on the, like a near a penthouse level, and that could have a very high per square foot rate. And in the next, transaction record that you have in your data set, it could be, say, a 4-bedroom house out in the suburbs, right, which naturally has a lower per square foot rate. So how, when we look at this data set, we can't just take an average and say that this is the current price. And in any given quarter, the mix of properties that's transacting could be very different. So to produce even an index to understand the overall market performance requires us to make some adjustments, right? The idea that we will use is actually to use statistical methods to control for quality differences. And there are a couple of methods that are popular, hedonic regression and repeat sales. We won't get into detail about that, but essentially these allow us to control for these quality differences. And we can build an understanding of market performance and also zoom in and get understanding of granular sub-market performance. So this is actually pretty valuable to understand. For example, if we look here at all of London, right, is sort of the blue line index. And by the way, this is something that PropertyQuants produces, right? And then, if we look just at prime central London, you can see market actually started to turn down a little bit earlier. So there's some divergences that you can spot. And in fact, there's some opportunity there as well. If you do this for Singapore, you will also spot something similar in that, overall for the Singapore index, you might see that it's going up. But if we try to look at something that is, in District 9, for example, we'll see it turns down. So you can spot some of the divergences and opportunities. You could benchmark your portfolio of real estate. And that was really important, right? So I was working at GIC, a lot of investment into real estate. And the question is, how do we understand a manager's performance? Is it leveraged exposure to certain sectors, or do they have skill? And in order to do that, we need to produce some kind of benchmark for the underlying real asset performance. And yeah, you can zoom in as well to understand sub-markets here. This is one of PropertyQuants sort of analysis as well. We can zoom in on a project by project level, and we can show you for a particular point in time, say how much a specific condominium project has appreciated by, or what the compound annual growth rate has been. So some opportunities in this space. And in terms of monetization, people are actually willing to pay to get these index data. MSCI sells these IPD data. There's also NC Reef and NARI. And as mentioned, with large funds, they often do want to buy that to benchmark the managers and understand what the expected returns, if you allocate certain percentages of your portfolio to real estate, might be. So people are willing to pay for index data. For those who are interested in the Spanish market, Idealista is probably the largest real estate website there. Due to the way that the regulation is set up, unless you have the right kind of license, you can't get the underlying property transactions. But companies like Idealista can turn around and, given what they're seeing, sell you indexes that tell you for this neighborhood, for this type of property, say 2 bedrooms in a particular neighborhood, what is going to be the property performance index, and people pay for this service as well. And then fund performance, right? Companies like Prekin or Cambridge Associates will sell you performance of, say, PE funds, and sort of let you understand where that particular vintage is, and that's also another way of monetizing, right? So after property price indexes, there's also automated valuation. So by automated valuation, you guys see something different on the screen now. What we mean is, like the Zillow's estimate out in the US, or if we're looking at Singapore, like the SRXX value, this is something that as a company, PropertyQuants, we do sell on a business-to-business basis. You can buy API calls from us where we do the valuation for you. And really what it is given a huge set of data underlying of property transactions. We've done the research so that we're able to spit out instantaneously a fair market value for a particular property, what that might be on a per square foot or per square meter basis, a range estimate for the property price, and even simulate where it has been over time. Now, actually multiple monetization options for automated valuation. First and foremost, around the world, these are being used to drive traffic for various reasons. So Zillow, right, use it to get people to come in and look at the property listings on their website. Zolo in Canada, probably same thing. CoreLogic, drives people to go there and potentially buy some of the CoreLogic property reports. So by the way, anybody interested in Australian real estate, you can go to Property Value to get a free, sort of valuation. And if you're interested in getting more in-depth data, CoreLogic in Australia, CoreLogic RP Data sells those reports. Zoopla in the UK, you can get a valuation and drives in for the listing. Urban Zoom in Singapore uses that to lead in and lead to some of the agents on their website. So that's one application of automated valuation. Another application, which is maybe more interesting, some of you guys may have heard about instant buyers in real estate. So instant buyers give instant liquidity to homeowners. So Open Door, Zillow also does this. Started a model where essentially you key in your address and they will run automated valuation in the background and can make instantly a legally binding bid for your house, and you can click and sell the house. It's recently become a little bit more nuanced in that they might send somebody to take a look, but it's all built on the backbone of having a strong automated valuation model. Another application is alternative financing. So if you look at, say, companies like Knock, I think Properly might be another one. What they will do is either offer you bridging loans so that maybe you can buy the next house you're interested in first, get financing based off of the current home that you have based on their valuation, or there may be mortgage players instantly issuing a mortgage just based on you keying in an address and the data and analysis that they're able to do. Now, the angle on using an automated valuation, as we build these valuations, we can identify what are the drivers of real estate pricing. So with a company like Plunk, it can tell you which are the renovations or alterations that I should make to my house or my property that will generate the best return on investment. So these are all different use cases for automated valuation models. Now, obviously, there are other applications. So we have, PropertyQuants does use this to make some investment analysis, but we also teach this in a course. I'll talk about that a little bit later. And we've had course participants build automated valuation, tied it together with web harvesting efforts. And what they're able to do is, say, scan a whole bunch of potential listings and identify, say, the top 10 most undervalued properties and list those as the ones that, hey, I want to buy to either buy to let or buy to fix and flip or so on. So those are other applications of AVMs. If you're a broker or you're a real estate fund, you will obviously need some of this to recommend, what is a fair price to bid, sell, or lease an asset. So many use cases for automated valuation. Time series forecasting. Here's an example of some of the forecasts that we made for particular markets. There are companies in this space selling some forecasts. Macroeconomic forecasts are definitely really popular. Oxford Economics, Capital Economics run a good business selling these. These go into, for example, discounted cash flow, right, type models for individual deal assessment. If I need to forecast, hey, what do I think the rental growth is going to be? A lot of analysts will try to feed in what Oxford Economics forecasts, maybe the inflation or inflation and GDP trend might be, and use that in their forward numbers, right, to put into the DCF model. PMA does some real estate forecasting. So many opportunities in this space, and some of the methods that you might want to look into will be sort of ARIMA, vector autoregression, vector error correction models. Some of the machine learning methods can also be applied, and some of the deep learning methods as well. So I think with this sort of use cases are a little bit clearer. being able to forecast potential appreciation on the market tells you where to invest. We've worked with somebody in our course who was working for private equity real estate fund, and her job or her task was given thousands of zip codes of office market rental indexes, apply these forecasting methods to figure out which are the top 10 markets, and we can adjust for not just what do we think the returns are, but what's the uncertainty in our forecast, so that you can rank order and say, okay, these are the top 10 markets, and let's prioritize deal sourcing in these areas. So many different applications of time series forecasting. Anybody have any questions to this point?
Actually, I do. This is Alex.
Yeah,
I have a question about for example, the QE or all this relief program from United States printing trillions of dollars. How does it affect your model? And secondly, there are constant concern about the housing prices to disposable income. That gap widened significantly, and governments are under pressure for cracking it down. So this kind of political factors, I wonder how you can model those. Thank you.
Yeah, no, thanks so much. So in terms of the way that we do this analysis, and that doesn't mean that that's the only way, right? This is what we do internally, and everybody will have their own approaches. We kind of think of it in two separate ways. So one is sort of forecasting sub-markets, right? So which are the markets and what do we think the performance of those markets is going to be? So that's part one. Part two, once we pick the market that we like, what do we think are the most undervalued opportunities in there? So running an automated valuation to pick the undervalued opportunities. It's going to be part one where we can have some hope of modeling in some of these factors. In the time series forecasting, if you do it using these systems of equations, so either vector autoregression or some of these machine learning methods, you can combine multiple factors together. It could include factors such as the CPI, money supply, what is the current GDP per capita. Those are types of things that we would include inside the forecast and see whether that helps to make a more accurate forecast. Now, that being said, just like any kind of quantitative endeavor, there can be kinds of like sharp regime shifts that may or may not be picked up by the model. That exposure, I believe, is the same as you would have for most kinds of forecasters, whether doing it manually or if you're doing it in a quantitative method, right? People are similarly unprepared. I will say that by monitoring many different markets, you can pick up on some of these potential changes, right? Both from, it's just not possible to keep track of that many markets and that many indicators in a human way. And secondly, also, to the extent that some of these take time to reflect in real estate markets, which are inelastic in terms of supply and demand, you can pick up on them from the trend in the market. When we think about real estate in particular, if there's a shortage of housing or relative to the demand, that's going to persist for a couple of years before people can actually fill that gap. And once people have built and typically overbuilt the supply, that's also going to last for a couple of years before it sort of evens out. So there's some opportunity in that space. Okay, so thanks for that. Let's move on to some of the other things that we can do. Cluster analysis as well. So if you guys covered cluster analysis in your course, sort of grouping objects in your data set according to which is more similar. This is just examples that you could use them to cluster and figure out which groups of properties are really similar to help you with valuation, or think about, hey, I wanted to buy a property, but I missed it. Which properties are more similar? Or think about, I have a portfolio of real estate. Is it concentrated in clusters which are really similar, or am I actually diversified? Another application from academic literature of cluster analysis is to actually cluster the macroeconomic conditions over time. So these are the bars that are being shown versus the price index, which is shown in the red line. So by scoring the macroeconomic conditions and building these clusters, you can get some indication about where the property market cycle might be. So those are sort of some of the uses or use cases of some of these techniques that you may have come across or that we are using in the data science sphere. Geospatial analysis is another one, picking up more and more interest. Originally started out with oil and gas industry, but now increasingly interesting for real estate. If you guys haven't come across it, you can look up S3 ArcGIS, really interesting source of data, tons of layers of information. And that's a whole branch of software which can be really useful for doing spatial analysis. As an example, here on the left, what we're showing is PropertyQuants proprietary school scoring. So we have a methodology for building location scores based on school catchment areas. And what we're seeing on the map, those areas in red should be worth a little bit more, everything else kept the same, because of their access to higher quality, higher demand schools, versus those areas in blue, everything else the same, would be worth a little bit less. So school scoring is one aspect of it. WalkScore is a company that started in the US. I believe they might have New Zealand now. I could be wrong. That scores things based on how walkable is a neighborhood. You might be interested in companies like Placer.ai. So you may have heard this before. There are certain apps on your phone, and a couple of hundred of these apps quietly collect your location information without you knowing it. You might have consented. What companies like Placer.ai do is turn around and sell that information in aggregate to tell people like, okay, what time of day, what location, different kinds of demographics of people. And that's really useful when we're thinking about retail locations. If I wanted to open up, say, another Chick-fil-A or something like that, where might I want to locate my fast food restaurant? I want a density of people at particular times of day. And I also don't want to be too near my competition, right? So you can use information like that. Kumi Analytics, out of, actually, I think they're based out of Singapore still, selling satellite light intensity information. So how many lumens, right, on a map, and what you can figure out with that light intensity is for developing markets, which might be the next areas where development is picking up. So maybe you want to develop property or pick up property in that space. A retail space based out in the US, delivering reports to US retailers about particular locations that they want to open up. With sort of pressure on retail being higher than ever, this sort of like analytics can be even more valuable, right? Locate Alpha, those of you interested in the US market, it's a really interesting website, focuses on Texas in particular, done tons of scoring on various factors, so really interesting analysis. GeoIntellect does custom GIS analysis for Russia and Kazakhstan. If anybody's interested, you can visit their website. And then Envelope City is another branch of analysis altogether. There are a couple of companies in this space. You can kind of think of it as like analyzing urban planning. So if you think about any given city, each land plot comes with zoning restrictions. What Envelope.city will have done is to figure out what you can build in a particular plot. And from there, what are some of the undervalued plots that might be worth investigating further. Maybe I'll just touch on emerging technologies, and then we'll see, how we are on time and whether you want to go further. But emerging technologies cover a range of things. So computer vision, so on the left, a set of interesting companies are starting to use computer vision to help in the real estate market. If you go to Foxy.ai, you can go to their demo, and what you can do is upload a couple of pictures of properties, and they will score the condition of the property. If you think about trying to pick which property you'd like to buy from a website like a Property Guru or Zillow, one of the things you probably care about is the condition of the property. Now that's typically subjective, and it's difficult to gather, right? It's not anywhere on the listing. The listing's not just going to say like, hey, this is objectively a luxury property or objectively needs renovation, but there are pictures. So can we use a machine learning approach to identify the quality of a property based on the pictures? And companies like Foxy AI are trying to do that. So feel free to play with that. The demo is kind of interesting. Load some property photos and see the scores that come up. Attribute based out in Singapore, there's floor plan analysis. So how well laid out is a particular unit in terms of usable space, flow of the property, size of the bedrooms, and so on. That does make a lot of difference in terms of how willing people are to buy it. But that information is typically stored in some kind of image file. And it turns out that making that analysis and coming up with a quantitative score in an automated way is not straightforward at all. So floor plan analysis is another. Chatbots, right? If you guys have learned a little bit of natural language processing and some of these AI methods, chatbots are a really interesting space. FacilityBot based out in Singapore will take over facilities management using a chatbot where you can communicate with the facilities manager in an automated way on WeChat, WhatsApp, or whatever, what have you, right? So that's another application of some of these techniques. And then natural language processing has some additional applications. If you go to mogul.sg, it's a website in Singapore for property listings that allows you to type in a very human way near Nanyang Primary with a balcony on a high floor, and it will pick the listing that matches your requirements, and you can just type in, in a very human way those requirements. And finally, lease abstraction. So in the real estate field, a lot of the contracts are still, these could be tens or 100-page PDF, which somebody has signed. How do we go from having that kind of PDF to a data set in Excel that maybe we can do some analysis with? So lease abstraction companies do some natural language processing to do that. So I'm happy to pause there. This gives you a flavor about, the way in which we can apply various technologies to real estate. I think we probably need to wrap up. So why don't I jump ahead, and I just wanted to highlight two things, and I'm happy to do Q&A. So a couple of things that I wanted to highlight. If you're interested, there is two things that I'm involved in. If you guys are interested in how to apply data science and machine learning concretely to various asset classes, on the left, you can look up, the newly launched NUS Asian Institute of Digital Finance, which is launching a course soon. So you can go to this website to click on it and find out more. And on the right, PropertyQuants does offer an 11-week course on how to apply data science and machine learning to real estate. We actually teach all the way from how do you do programming, right, from the basics, all the way up to building automated valuations using geospatial software, time series forecasting, cluster analysis, and things like that, and culminates with doing a capstone project. So if that's of interest to you, follow those links and you can find out more. And if you want to contact me for any reason, my contact information is here. And with that, let me pause that there. Thanks so much for listening, and I'm happy to take any questions that you might have.
Nelson, first, thank you so much. This was really interesting. I have a question related to the effects of COVID. I mean, how do you see all the changes in behavior? I mean, you see many people writing about an increased interest in suburbs in the US and second homes like in Brazil. I mean, lots of properties in the outskirts of Sao Paulo and in beach locations skyrocketed. I mean, provided that they have good internet access, because people now can work from anywhere. So how do you see those effects and the general trend in residential property right now?
Yeah, thanks. I think that's true. I think that there was a pretty good article on Bloomberg summarizing that as well. And I think that's noticeable with the data, that there has been more interest and upward movement in properties that are more in the suburbs, and in the city centers. Generally, it's been sort of down or flat, especially on rentals, right? So if we were looking at data on the rental market in New York, and it's beginning to bottom out now. But like if you looked at it a couple of months ago, just as an anecdotal example, look at StreetEasy.com, which is the most popular listing website, right, for New York City apartments. They had to include a new field on the website called number of months free rent, right? Because rental was so bad that they started to give you like 3 months free out of 12 or something like that. So sort of, significant drops in rent. I was following London market as well, and the central London sort of rentals can be down anywhere from 10 to 15% or more, depending on where you are. So rentals were hurt in the city centers, maybe less so in the suburbs. At the same time, capital values, yes, down somewhat, but not as much as the rentals are down. But capital value is more up on the outside. So those are some things. Now on the technology front, also some interesting effects, right? So, Matterport, right, which does like 3D, now you can do 3D walkthroughs of your property online. So companies like Matterport that help you to do that kind of 3D scan really taking off, right? So some interest in that. So there are opportunities in that space as well. I think virtual viewings and so on have picked up. Hopefully that's helpful.
Good, thank you.
Yeah.
And also a question about the availability of data sets, because I can imagine that some attributes of properties, like whether it's feng shui or not, or like the colors, whether they're aesthetically suitable or not. It's very hard to quantify these and datafy these. So that's one thing. And in some countries, I assume that even the basic attributes data sets are either proprietary or non-existent. So how do you go about getting that data to feed your models in the first place?
Yeah, no, so that's a good question. You know, when we started PropertyQuants, the company 3 years ago, you know, we came from sort of the public markets world and naively said, hey, we're just going to build these models and we're just going to invest around the world, right? It's going to be easy. And it turns out that's not the case, right? So data is very fragmented. The availability of data varies a lot across geographies. In general, residential markets are a little bit more transparent than commercial markets. Countries like, you know, Singapore is pretty transparent. London, UK has a reasonable data set. You might have to do a little bit of work to join stuff together. US also is okay, but it's so large that there are opportunities, right, for companies to set up to provide data. So that's something that maybe we didn't touch on that much. But if we look, say, in the US, a lot of free data is available county by county, and there's open data, but it's just overwhelming. So companies like House Canary, Cherry, Atom Data, Black Knight, all of these companies are actually in a good business of aggregating, cleaning up, standardizing, and reselling the data. In the UK, you have Realize, Realyse, as well as Property Data.co.uk selling some data. Australia, people's CoreLogic RP Data is one, SQM Research, a couple of other guys are in the business of selling data. Then we talk about commercial. There are good business models selling commercial real estate data. CoStar, RCA are in that business, and they are involved in either, you know, so CoStar, to my knowledge, started out with like getting people to contribute information so that they can fill in league tables and so on, and then now have information about property transactions. But do engage, and I believe RCA does the same, in like, you know, massive calling of people to assemble a data set, right? And so that becomes a valuable data set that they then on-sell. Does it make sense for us to reinvent the wheel? So if you want the data, maybe you have to buy it. And then Compstack, COMPSTAK, out in the US, also really interesting business model for commercial real estate brokers. What they can do is contribute information about a transaction they know about, and then get information out based on number of points they have based on the contributions. So that incentivizes them to contribute, and then that data set becomes saleable by Compstack, and they charge you know, a pretty penny to get access to that data set. Another interesting model, Axiometrics, out in the US, they actually help people to do some kind of you know, property management portal, and based on that have a lot of information about operating characteristics of the properties and can on-sell that data set. Finally, I think the last point, some of the more esoteric things that you like to include in the data. Yes, it's true. These things affect real estate pricing. Do I have morning sun, afternoon sun? What is my layout? It's actually challenging. Companies like Attribute, right? So we covered that a little bit. There's a couple of others, Arculize and Arculogic from Switzerland, trying to analyze these floor plans. But to our knowledge, there is a step in the analysis of floor plans which makes it not currently automatable. It's an open challenge. I'm sure at some point somebody will figure it out, but right now, no. With views and sunlight, this is becoming more and more popular. What you need is a 3D map. So in Singapore, SLA GeoWorks has an incubator and has recently released a 3D map of Singapore for some pieces of it. And then if you think about it, the companies that are innovating this space, to our knowledge, actually come from the gaming industry. So if you think about playing, I don't know, this is too dated, but like Counter-Strike or something like that, you need to model like the line of sight and the sunlight and things like that. So those companies are well set up to do an analysis given a 3D model of views and things like that. So this is nascent and coming up. Feng Shui, I think numbers are not so bad. There was an NUS research paper on analysis of 8s and 4s in the Singapore property market and showed that there was a meaningful impact. But Feng Shui layout, I think, is difficult because it's too subjective, and each geomancer will give you a different answer. So hopefully that's an interesting set of answers to your question.
That's good. Thank you.
Cool. Anything else that might be interesting to you guys?
Maybe one question. Are you using Google Street View data at all? Sounds like a good data source.
Street View? We have not. That does sound interesting. I think you would have to get into a lot of the like image recognition to figure out how to use it and how to to quantify that. These companies that are highlighted, so Foxy AI, looking at the condition score of properties based on picture, that's relatively new stuff. So Foxy AI, ResB AI, and what other company, Photo I like. I think that is nascent. It's big. It's starting up now, and to our knowledge, nobody's really using anything like that. So yeah, there's a lot of opportunity in that space.
Okay, thanks.
Cool. I guess we're over time. I'm happy to take any further questions by email if you'd like. So you have my email address there. Feel free to email me if you are interested in learning a little bit more about real estate specifically. Look up this link for this course. If you are interested in investing using machine learning and alternative data, you can look this up. And yeah, connect with me on LinkedIn. I'm happy to chat. Hopefully we'll speak again soon.
Thank you, Nelson.
Thank you.